guys, this is Doc's Market Minute for Wednesday, August 26th. Now, over the last couple of days, I've cut videos to deal with the issue of, number one, on Monday, how did we get here and what were the signs that showed us that we were about to get here. So I did that on Monday. Tuesday's video was more of, okay, what's going to happen from here, more in the longer term. So in the next couple of months, where do we expect the price to be? And we said in just about all instances for that, we expect to see higher prices, but what happens after that is really the key to the outcomes, those three different outcomes. So now what we're going to do is more focus on what's happening today and what are the emotions that people are wrestling with today and how to get through the next few days of this huge sell-off. Okay, so to get through the next couple of days, what you have to understand is that it's the market's job to convince everybody, abandon hope, all ye that enter here. So for those of you that are still in long positions that are way underwater, it's the market's job right now to get you to basically give up hope and say, well, this thing is never, ever going to recover from here. Remember, there's four states to a market. There's disgust, which is the initial swing down, and this is the point where people just sell out their positions in disgust. What happens next is disbelief, where people can't believe that the price is actually rallying. Eventually, after some corrections and moves up and down, then we get to the point where we get acceptance. So regardless of whether or not we're going to actually move into a bear market or not, we're going to have an acceptance level here in the next few months where people say, you know what, I think everything is healed, the market's going higher. And then that usually leads to some form of euphoria again before we get the next level of disgust, and whether or not that disgust leads to much lower prices in a bear market or whether that's just a higher low in the midst of a recovery, which was scenario number 2 that I talked about. Okay, so we got a long way to go. So right now we're still down here, basically cementing this bottom wherever it is right now. And what we're seeing is that for the last 2 days, we've had a strong gap up. You can see this in today's candle. The market's been open about 10-15 minutes now, and we've gapped up initially about 40 points, but we're bleeding red again. We're bleeding red. This is exactly what happened yesterday. We gapped up huge. We were up about 70 some points at one point on the S&Ps, and it gave it back all that and more. So an extraordinarily disappointing day for most people that had hopes to see some type of rubber band bounce, and now we're seeing the same thing again. Typically, the bottoms that last are the ones that gap lower to start out the day, just completely giving that capitulation signal, and then they recover in the last hour. The morning rallies that occur down here at the bottom are suspect and will likely be sold into. The reason for that is because of all the margin calls that are happening right now and are still being processed where people have got to raise cash. They have to raise cash to be able to reduce their margin load right now. And so what's happening is any bounce is being sold into. So until those margin calls are fulfilled and satisfied, every early gap that we're going to have is going to be taken advantage of. And so the ones that we really want to see, the lasting bottom will come on actually a gap down typically, and then we recover by the end of the day. So the daily candle will look something like this, a nice long hammer candlestick. You know, maybe even we start down here and then close the day much, much higher. So the real body is actually much bigger than that. So that would be a good example of where at least this swing to the downside will finally stop and we'll start to recover and then go into that corrective phase, that very volatile phase that I talked about. Very likely in scenarios 2 and 3, I really don't think we're going to see the V-bottom formation here. I think so much damage has been done is that we're going to be seeing selling into strength for quite some time now. Okay, so keep that in mind. Again, it's the market's job right now to convince you that this will never, ever go higher. And the best way to look at this is really on a gap chart here. So we'll bring up the gap chart, and right now what we have is we have from yesterday's close down here, we still have this major gap that is this morning, okay? And this is probably going to get chewed into, if not outright filled, by the end of today. Again, back to my point number one, it's the market's job to get, abandon hope, all ye that enter here. And finally, when everybody abandons hope and gives up their long positions, by that time the redemption will be done. We'll probably start to recover and then work on this gap to the upside up here, which is just above 1950 on the ES. All right, guys, that is it for today's report. Thanks for listening. Hang in there, and we'll see you tomorrow.